Deal Surgeons, Elite Masterminds, what's going on? This is Diamond Life, and I'm doing a review for my shadow trading method on Bitcoin and YM futures contract for Dow Jones Industrial. So basically, if you understand the shadow trading for people that actually see value in what I've created here, the way it worked is it's just kind of common sense if you understand the method. But basically, people can use this even if they don't understand how the structure works. I actually like using it myself, even though I understand how the structure works. So basically, right here on this day here, Ethereum was up here. I mean, this is like a dead giveaway, common sense. You didn't have to have a brain to do this one. And right here, Binance was all the way up here. Binance moves similar to Bitcoin and Ethereum, but Ethereum is the one you really need to watch. So what is it? What does that have to tell us? Let's go back. Let's go back in time. Okay. Okay, so what I'm saying is, let's go back in time. So basically, when Bitcoin was right here and you seen Ethereum and Binance just shoot up, and this is one standard deviation right here. This is 25%, 50%, and 75%. So basically what it showed me is that I have confirmation that price has to come up here. It has to. I don't know if that's making sense to people. Like, it has to come up to here. So what you could have did was understanding, especially when you saw up here on this exact same day, Ethereum was way up here and Bitcoin was still here. So I would have been buying. As price was going down, buy 0.1, 0.5s, one lot, nothing more than that. But just buying as price was going down. Why? Because we had confirmation the price had to come up to at least here. We have confirmation the price had to come up to here as well. Okay. But we have to buy it at one standard deviation at a time. So what I did was, when I seen Ethereum pop up here like this, I was like, okay, when price go back down, we're going to continue to buy. So I bought right here. Price came back down. I kept buying. I put on like 7 positions. I thought it was going to shoot up right there. Then I went back into drawdown here. And then, lo and behold, I had 7 positions on. I took off 3 right here at the first standard deviation. Why? Because I had confirmation that Ethereum and Bitcoin and Binance hit this line. This is 25% of the standard deviation in the first 5 trading days. So then, after that happened, price started to shoot back down, but I was like, okay, well, either I need to buy more or I need to just continue to hold what I had right here. This is what I'm working on right now, because I should have bought more, but I was kind of chicken and I just held on to the other 4 positions I had. I sold 3 at this standard deviation right here. So, I should have been buying more as price is going down, but that's, something I got to work on, because I'm not really going to hit these higher levels unless I'm buying in retracements. Okay, I have to understand that it's not reversing, it's retracing. So what's the next level of confirmation? Here, the 50% line. Why? Because Ethereum already hit 50% of its first 5 trading days, and Binance already hit its 50%. This is pattern trading. Okay, you don't even have to understand how the structure works. As long as you use risk management, this will work for you. That's why I'm glad I came up with this for folks, and it helps me out as well. So remember, I was chicken. I should have put on more buys as price was going down here, but I just still held my 4 positions that I built up from here to here. Okay, I had 7 positions on. I took off 3 here, still had 4 running. So what's my next level? Here, 50%. So let's see what happened. Also, another thing that helped me out was I knew price had to come back higher because the drawn liquidity for the week was up here. So as you see prices pushing up here, boom, what does it stop at? Look at this. What does it stop at? 50%. 1 standard deviation. Why did I hold my buys for up there? So I took off 2 positions here. Why? Because I had confirmation Ethereum hit it and Binance hit it. Does that make sense? So now what's the next area for confirmation that I have? Here, 75% level. Is Bitcoin there yet? Let's go to the right. Nope. Let's go to the right and see if it's there yet. It's not there yet. See? Well, I know it already hit it. Yeah, it hit it already. I'm sorry. Yeah, so I'm out of this trade right here. Yeah, I'm tripping. So I sold my other position, my other 3 positions here. I should have left a runner on because I didn't check Ethereum, but I think it did go higher. But I think price has to come up to at least here. I believe this low is going to be respected because price has to probably come up to here to this one standard deviation, but I haven't checked on Ethereum to see if it went higher or not. My guess is that it did. Okay, now let me go ahead and go to YM, and then I'll in the shadow trade and follow up. Okay, so this is YM. Okay, so this is the futures contract for Dow Jones Industrial, and I just want to, oh Lord, what just happened? Let me go back to YM. I think I missed. Okay, so here we go. So we're on a 1 hour chart. I'm on YM. Same thing, folks. You can laugh at shadow trading that I created if you want to. So basically, what I'm trying to tell you is the same thing with Bitcoin. Okay, here. First off, we have the standard deviations over here. The first 5 trading days. I should be selling this. This is absolutely insane. People don't even have to understand how the structure works, and as long as they don't over leverage, they really could get paid. I mean, because right here we had confirmation that ES on this exact day, ES was up here at 1 standard deviation. NQ on this exact day was at 75%. So what did we have confirmation for? What did we have confirmation for? Price was already up here. We had confirmation that price had to come up to 75%. Why? Because ES already hit 75% of its standard deviation, and NQ did. So that's why I put here, if I double click on this, it says 2 out of 3 SD target. That means standard deviation target, meaning 2 out of 3 already hit it. So as price was going down here, I was thinking like, well, maybe it's probably coming down here to this volume imbalance on the daily chart. So I actually went long right here. I was in drawdown. As price pushed all the way down here, I thought I was wrong. I was about to stop. If it would have hit this line right here, I just would have took a loss. I got in here a consequent encroachment because usually it'll come down about 50%. And so it triggered me right here. If you see this, it triggered me in right here, and I thought everything was good. Then it went down even lower, and I'm like, damn, what's going on? And so then it started to rise up, okay, out of that volume imbalance on the daily chart, okay? So then I took another position here, and the stop loss was going to be down here, okay, which is this order block. Okay, target was up here because ES and NQ already hit it. Does that make sense? So I was in drawdown again because I thought it was just going to move all the way up there. I was in drawdown again. It almost hit the stop loss, but it didn't. And then price came right up to what? 75% of the standard deviation because NQ and ES already hit it. I hope that's making sense to somebody. Thanks for watching.